I think either one should be good. I mean, it depends on if you see where people could use immediate feedback or, I mean, they do such an amazing job that you're blown away and, you have no such feedback but specific questions about, anything that they said. I think either one should be fine.
Awesome. Works for me. Thank you.
Sure. Thinking if there is anything else. 20 minutes for the chat and then 10 minutes for Q&A. So after the presentation, Nosheen, so I don't send it back to you after the intro, just dive right into it.
Yes, right, Ike.
Okay.
All right, the event will begin shortly. We are waiting for all our guests to join the event. Thank you for your patience.
And Christina, Philip, before I forget, when we start initially, will be great if you can give like maybe a 1 or 2 minute background on the fund, on yourselves, your role in the fund. That'll be great just to kind of set the stage for our audience.
Yeah, absolutely.
Totally.
Happy to do so.
Hi everyone, my name is Nosheen Zanab and I would like to welcome you all to KiwiTech's exclusive FinTech by Fireside pitch event. Today we have a fantastic fireside chat on early stage FinTech start funding, key strategies for seed and Series A investments, followed by 5 high-value growth stage startup presentations. For those of you who don't know or are joining us for the first time, welcome to KiwiTech events. We began with our events ecosystem in 2017 as part of providing networking opportunities to our founder partners, and the goal was to introduce them to our network of investors around the world. In fact, to date, we have hosted events in over 15 cities throughout the United States, as well as 3 international locations, including Toronto, Qatar, and Riyadh. Now, without further ado, I would like to invite Ike Sayed, SVP of Strategic Partnerships at KiwiTech, to introduce KiwiTech, followed by the fireside chat. Over to you, Ike.
Wonderful, Nosheen. Can you see me and hear me?
Yes, I can see you and hear.
Fantastic. Well, good afternoon, good morning, good evening, folks, depending on which part of the world you're dialing in from. As Nosheen mentioned, my name is Ike. I'm the SVP of Strategic Partnerships at KiwiTech, based in the Washington, D.C. area. We'll be kicking it off with a short introduction of KiwiTech, who we are, and then excited to launch into a panel discussion with my fellow panelists, Christina and Philip. Give me 1 second. I'll bring up my screen. And Nosheen, if you can confirm that you can see my screen.
Yes, I can see the screen, Ike, just the presenter mode.
Sure. Wonderful. Great. So I think most folks are return clients, as they say. For those who may not know much about us, would love to give a little bit of background on KiwiTech and who we are and kind of our history and journey, how we got here. So at KiwiTech, we are a global community of innovators, investors, and enterprises with more than 600 companies in our portfolio. We have helped raise more than $150 million in capital for our portfolio companies and provided an equivalent amount of services as investment. We are backed up by an investor network of more than 3,000 investors, several of whom are in the audience today, as well as 2 who have joined us as fellow panelists. We have close to 300 mentors in our network and hold more than 80 networking events annually, again, such as the one today, made up of demo days, investor roadshows, product demo days for our portfolio companies that have now finished their product. So again, super excited to share about our journey and kind of how we got to this far. In 2012, the founders of KiwiTech scaled, built, and sold one of the largest digital media publishing companies in the world. They took about 2 decades to build it from 0 to 5,000 people and sold it for $144 million. The following year, we launched the KiwiTech Startup Program. 4 years later, we started our demo day. The number of companies hit 100 in the portfolio. The idea for the demo days was, again, just like the one today, our portfolio companies to pitch to investors. At that time, a lot of events, all of the events were in person at the locations that Nosheen just mentioned, whether it was cities around the US, Boston, San Francisco, New York, Washington, DC. Every quarter, we would have an investor demo day that we would put together, as well as in 2019, started looking at international locations. So we had investor events out in Doha, in Toronto, Canada, and then in 2020, also had our first investor event in Saudi Arabia. Between 2020 and 2023, during the COVID years, the portfolio companies were almost doubling every year. We hit more than 600 companies in the portfolio, did more than 200 events, started making acquisitions in CFO as a service, CMO as a service, going beyond our core strength of offering CTO as a service to our portfolio companies. The idea is over the next 2 years to become a portfolio of more than 1,000 companies and have 100 of those companies exit at a $100 million valuation plus. So how does our business model work? Let's just say you have a startup and they have a software development requirement of $500,000. There's no minimum or maximum. Let's just take that as a ballpark number. So what we say is that that software engineering needs that they have, half of our fees we will take in the form of cash and half of it we will take in the form of equity in the company. This is at the valuation and the term sheet that we write, which the company is talking to other investors at. So, whatever the valuation is, a lot of times we are the first investor in that case, we run the valuation ourselves and move forward with the term sheet with our portfolio companies. For early stage companies, a great way to save capital upfront, to basically deploy the cash wherever else is needed to grow the business, for example, marketing and other areas. And again, leave the software development and the engineering to experts, again, who have done this many times in the past and are experts. Company becomes big, company grows up. At any point, they obviously have an opportunity to insource the engineering needs and the CTO as a function. But till then, again, ability to utilize equity as a form of payment in terms of getting the work done. For the deal flow, again, if you just look at how things have been over the last few years, between 2019 and 2023, if we just look at those 4 years, we contacted over 200,000 companies. About a third of them, we got an initial response in terms of yes, this is interesting, let's talk more. About a third of that, we got on a call with the CTO, the CEO, ended up with the final pickup for about 400 companies. So as you can see, it is a very selective process in terms of who we work with, who we talk to. A lot of times, if you see, for example, between the deals that we review and who we finally sign the term sheet with, it's less than 5%. So companies always have a chance of working with us in a non-equity model, not highly preferred, but that is something that we are open to. Otherwise, our majority preference is working with companies where we can get a term sheet in play and essentially end up owning a piece of the company. For the ecosystem stakeholders, we have our portfolio companies, again, 4 of whom are pitching today to our investor network. Other incubators and accelerators who we like to partner with, as well as our corporate communities. The technology team is more than 500 strong, made up of our UI UX people, designers, QA, mobile, AI, machine learning. If it's a software stack, we cover it. I mentioned our Graphite Financial. So in addition to CTO as a service, they now also offer CFO as a service, in addition to digital marketing. So I think CMO as a service. And again, the idea there is to at some point become a one-stop shop. You have a good idea, you come to us, and we will basically take care of it till you become big. And then obviously you can go out and get the headcount and the resources, the human resources that you need to keep your company going. And the idea there is that really through folks like myself, make an impact on the ground through local partnerships, at the same time utilize our ecosystem for our global capabilities. Events are very extensive. If you are an investor, any kind of investor, we have something for you, any asset class, any specific vertical that you have. So for example, anything from FinTech to biotech to deep tech, as well as industry specific, so FinTech, blockchain, to asset class, family offices, angel investors. A big ethos of the firm is giving back to the historically underserved communities. So every quarter we have our Female Founders Day, been doing this for about 4 years. Similarly, Black Entrepreneurs Matter, Hispanic Founders, again, as a way of giving our underrepresented and minority founders a chance to interact with investors and to be able to pitch to them. So super proud of the event that we have put together today. 2 incredible panelists, Christina from New York, as well as Philip, also from New York. I'll give a chance to the 2 of them to introduce themselves briefly. We have 4 incredible companies presenting today. All of them are KiwiTech portfolio companies. Francesca from Philly, Garrison from Delaware, Fanny from Toronto, Canada, and Nicholas from New York. Good luck to all the presenters today. I know you guys will do great. We'll have them on after the panel discussion. For now, I will stop sharing and we will launch right into the panel discussion. I use the word fireside chat and panel discussion interchangeably, so bear with me, guys. Wonderful. So with that, I think we'll dive right into it. Let's see now, maybe we'll go in a last name alphabetical order. Philip, why don't you go first? Maybe share with us a little bit about Angels. I know you're based in New York, but a little bit more about the thesis of the firm, where it's based, where you have offices, what you guys look at, and again, your role at the firm. That'll be great. And then Christina, we can go on to you.
Absolutely. Appreciate the thoughtful introduction. Really excited to be here. This is actually not my first panel for KiwiTech, so thank you again for the invitation. I'm here speaking on behalf of Angels. We are the world's largest and most active venture syndicate that prioritizes equity and access in the way we do business. Tremendously proud to say that I've spent my whole career here, which albeit is not very long, but in that time I've learned a tremendous amount about VC, about how DE&I can positively impact business outcomes. And today we have evolved into this kind of far-reaching, almost like venture capital marketplace, if you will. Our tentacles spread across the world, across stages, across verticals, although I would say our sweet spot as an investor is in that sort of seed to Series A stage. Because we have an extensive network of folks who are advocates and allies for what we do, we're almost more responsive to what they're interested in investing than any particular thesis that we adhere to. So today we're obviously super involved in whatever's going on in AI. FinTech is certainly a big and popular category as well. We do some variety of sort of enterprise SaaS investments, even CPG, really whatever our investor members are interested in, we'll consider and sort of potentially propose to them as an opportunity to sort of participate within. Our work is volume driven. So in the, I think, 7 years or 8 years since we were founded, today we have about 2,500 portfolio companies, an additional 4,000 investor members in our network, which we're super proud of. Again, because of that syndicate nature of what we do, which is almost akin to what KiwiTech is as well, we've been able to get our hands in a bunch of really exciting cookie jars. We have, I think, 60 or so unicorns in the portfolio today. So with that, excited to sort of talk about FinTech in general. Christina, I'm excited to hear your thoughts on the market and how you see it, but I'll hand it off to you.
Appreciate it. Thank you. First of all, thank you for having me. I'm very excited to talk all things FinTech today. like to introduce myself. I'm obviously based here in New York City. I'm with Forum Ventures. A little bit more about my personal background. I joined the firm about 4 months ago at this point, so relatively new. Before that, I come from a biotech background, specifically in neuroscience and Alzheimer's disease research, coming from the University of Michigan, Ann Arbor. I worked with several other VC funds in the past, including Battery and other funds, and touched growth equity stage as well, so kind of seen the much later stages that a venture capital company can get to. And in terms of Forum, our fund is a little bit multi-strategy. We have an AI incubation studio where we fully incubate companies ourselves. That's a whole separate team out in Canada and different from our main strategies, which is our pre-seed fund program, as well as our seed fund. In terms of the companies we like to invest in, it's heavily focused on B2B SaaS, but we have done B2B2C as well as marketplaces, and we have done hardware recently with investing in a robotics company. So we're pretty open as long as we really like the founder and the product. We are flexible in that nature. In terms of sectors, we are sector agnostic, truly generalist, as you probably saw on our website. Maybe you haven't taken a look yet, but a lot of our team is previously exited founders in a lot of different industries, which really allows us to be truly generalist and get the help that the companies really need and give them advice. The two things we really focus on and support them with is really making customer intros and getting paid pilots to get to that ARR level and milestones needed for the next round of fundraising. We also make active intros to investors so they can get the next round of fundraising. We do a lot more than that, but those are some key highlights there. We have over 400 portfolio companies. This is our fifth fund, and I'm very excited to be chatting all things FinTech. So I will hand it over back to you.
Wonderful, fantastic. Let's dive right into it. I'll post a link about the state of global FinTech financing. The numbers in the US are not that different, but maybe it's where current interest rates are globally across all central banks. Maybe we're in an election year, but the facts are that in the first half of 2024, we wrapped that up about a month ago. The global capital investment was around $16 billion, which was a decrease of 19% from where the numbers were in H2 of 2023, the preceding 6 months. Again, there's a lot of great information shared in that link that I just shared in the chat window about what's happening, globally. US is still by far the leader in the FinTech space, followed closely by the UK. Again, some disappointing number there in terms of female founder FinTech companies, again, still representing a very, very tiny percentage of the global numbers. Again, that seems to be consistent across the geographies. So that's the first thing that I wanted to start with and get reaction from both of you. And maybe we'll go in the reverse order here. Christina, if we can start with you. What are some of the current trends that you are seeing in the FinTech investing? Any certain geographies, any sector perhaps, payments, blockchain, settlements?
Sure.
Would love to get the first from you.
Absolutely. So I definitely think that the seed and Series A has definitely slowed down, and that's from all different sectors, not just FinTech. In terms of pre-seed, I do think it's still healthy and alive. I have seen a lot of companies recently get funded within FinTech. I think also this trend will kind of flip in the coming years as we are in a bit of a downturn and recession potentially upon us. So I do think that number will flip the other way around. In terms of specific sectors of FinTech that we're kind of shifting towards being funded, I think embedded financing is growing largely, specifically for lending. I've seen a lot of lending embedded finance startups on my desk. I think blockchain it's starting to be another bull slowly, but surely. I think specifically blockchain versus cryptocurrency needs to be separated, and we can dive into that later on. But there's a lot to do with blockchain technologies. Companies are realizing that, especially the big ones like JP Morgan, they created their own internal blockchain called Onyx, which they use to internally verify trades and transactions, which has become increasingly important as we become more and more digitalized with our payments. So I'll actually stop there.
I will second everything you say. I will also note that I think that this general slowdown is sort of a result of two things. One, the end of this overcorrection from the follies of 2020 and 2021 in terms of funding, where you saw VCs kind of, cut valuations really intensively, a repurposing of their efforts to creating more sustainable business models rather than, high growth outcomes. And I think now what's happened is there's this existing pipeline of some really, really big unicorns that just haven't exited yet. Stripe, Klarna, Chime come to mind immediately. Those are 10, 20, $40 billion plus exits that are just kind of waiting for an IPO to happen. I personally would argue that that hesitancy is likely because the political climate of this country is relatively uncertain. I think November is a big election. In no way to be political, I think either outcome would probably create that sort of initial onrush of folks making things happen. But I think that is sort of what investors, are most waiting for, is that liquidity moment so they can start reinvesting and kind of repurposing their funds into really awesome, new, exciting, early stage companies. Christina mentioned some in embedded finance. I see that as well. I think embedded finance is a super exciting space. We've, at least at Gangel, seen some really interesting applications of AI when it comes to wealth management, for example, whether it be smart portfolio construction or investment recommendations. So that's really interesting. Loan servicing as well. I think that's a really big one. I think AI, when we think about risk assessment, that'll be a really interesting space. Cybersecurity is obviously more enterprise SaaS related, but I think it does intermingle with FinTech, and it makes products a lot stronger moving forward. And lastly, we've also seen some more sustainability driven investment opportunities on our desk, whether it be like targeted financial services for specific underrepresented folk, or climate tech and green tech finance enablement. So all that stuff we think is super, super exciting. I hate to repeat the word AI, but like you really can't avoid it in VC. When I think about FinTech, not today, but in the near future, what I'm looking for, and Christina really astutely mentioned blockchain and the separation with crypto. What I'm looking for is like, when is there going to be the technology to marry the prior investments and infrastructures built for Web3, for tokenization, for cryptocurrencies, for the actual digital spaces that they were meant to inhibit and meant to exist within, that just haven't really caught on yet. So once that catches on, I think there'll be a massive, the white space for FinTech to kind of integrate itself within it. But that will obviously take some time. So that's what I'm looking out for. But if there's ever a sort of short answer to a long question, it's we're seeing some positive momentum coming back to the market. We're just waiting for those big IPO moments to kind of have that cash be splashed back into people's pockets so they can feel like they can spend again.
Sure, absolutely. I'll put this another link from the banker. Again, it's a kind of affirms a lot of the things that both of you were just saying in terms of what's happening in the space. A little bit of doom and gloom, still on the FinTech, that it's still describing how, for example, in 2023, that's the entire year, investments were lowest on a 5-year number as far as the FinTech space was concerned. Now, the only area to experience an increase were prop tech and insurance tech. So again, kind of within FinTech, these were the 2 areas where the numbers actually went up. But also talks about AI, Philip, that you just touched on, that in spite this enthusiasm for AI, global FinTech AI investments also saw a decline, more than half, 28 billion to 12 billion. But again, I think there was some explanation there in terms of FinTech's financial institution rather kind of really prioritizing their strategic alliances and product expenditures. So the question for both of you is maybe if we can do a bit of a deep dive into FinTech from what you folks are seeing. And again, Philip, I'll start with you and then go to Christina. In terms of, again, what are you excited about when you're looking at FinTech and you're evaluating all these business plans coming in? Where are you seeing kind of maybe valuations come down quite a bit? Maybe it's a good time for investors like yourself to go in. And where you continue to see challenges, that maybe you're going to put off, discussions till maybe later in the year or maybe even into next year. Will be good to get some thoughts from you on that.
Absolutely. When I think about what I'm looking for, what I'm excited about, I briefly touched on, when will there be this kind of deeply embedded Web3 and FinTech space that's actually productive and valuable? Who knows? But I look to the winners that are currently about to exit, those Stripes, those Klarnas, those Chimes founded, a decade or so ago. What they were able to do was take this really, really complex architecture and make it extremely simple for end users to interact with, whether it be through payment processing, embedded finance, buy now, pay later, et cetera. So what I'm looking for is that same aha moment of this is a deeply simplified customer experience, but a remarkably complex and defensible architecture, right? So where that comes in, I hope it comes into, some sustainability driven investment, just because that's what Gainjals is interested in. But I think the bigger opportunity will definitely be in embedded finance. That just is the higher touch point, and oftentimes increasingly more difficult to solve. I will note that, we've seen stuff on our desk that we think is interesting, but perhaps not as defensible or as diversified as what's already been tried and may have failed. I think we're kind of seeing folks come back with loan servicing for SMBs, for example, which is a really important thing to do. But what I'm looking for is what's the actual disruption? How are you actually enabling that in a way that someone any number of big players are already. So that's just a general kind of macro level commentary on what I'm personally looking for. But we've seen some really, really cool stuff in the intersection of wealth management, diligence, and I don't know if that's technically fintech, but in sort of how do we create automated and smart financial tools for whether it be professional wealth services or the end consumer. That's what I think is kind of interesting. Having a cheat sheet that tells you where to invest and when to invest would be really cool. There's already some iterations of that online. I don't know if they're where they should be just yet for them to be in that super unicorn category in 2 to 3 years. But if I were to ever posture on what maybe the next kind of crop of winners, I think they'd exist in that sort of specific space, because it really empowers and enables their end users in ways that we as humans can't service at scale. So we'll see. That's sort of what I've seen. Christina, I'm curious to hear what your thoughts are on that, because Gainjals isn't specifically focused on fintech. So a lot of what we get is sort of non-focused and therefore kind of all over the place. And so I don't know if my thoughts are as specific as the audience may be looking for. So would love to hear your thoughts.
Yeah,
quick
no
question.
worries, Philip.
Philip, you mentioned around advisory services and wealth management. So is that a lot of AI plays or kind of large language models, or kind of how are you seeing some of the innovation there? I'm kind of curious.
Great question. It's largely through LLMs mostly, and a lot of it is basically servicing diligence automation for PE firms, for wealth management firms on the one side, and on the other side, it's forgive me for not knowing the specific architecture of that infrastructure, but it's essentially creating smart automation and intuitive strategy building for wealth management portfolios, basically, and kind of giving them the answers to where and when they should be making their commitments, which I think is super interesting. Obviously, a high degree of risk involved in that, because if you're wrong, then a lot of stuff can happen. But I think it is an indication of where this new influx of AI can kind of take the fintech sector. So that's just what I've seen and what I've kind of been most interested in personally.
Right, Christina?
Yeah, thank you for that, Philip. I think that's super insightful. Here at Forum, we all are also generalists, not super fintech focused, but we have seen a lot of fintech deals and have done a lot of them. I will say something to point out based on what you were saying is, yes, there are a lot of LLM solutions, really just wrappers around LLMs for these wealth services, as well as personal finance. And it's really hard to get downstream funding for them. A lot of individuals, investors specifically, are looking at this and saying the barrier to entry has just been really lowered down in terms of who can build in fintech because of AI, obviously. So LLM wrappers is something anyone can create. So now it's more about distribution, advantages, partnerships, getting those relationships formed and getting paid pilots. It's really more about that specifically than just the product at this point, because again, it's really lowered down for barrier to entry in terms of building in fintech. Now, innovative solutions that I think will take place in terms of product architecture, I think will be in micropayments. So specifically, I'll give you an example. Let's suppose you want to go on the Wall Street Journal and you want to read an article. Usually I'll ask you to subscribe because it's a pro article and you need that. Instead of that sort of model and having to pay $20 for just like reading the article, innovations such as being able to have like a wallet and then paying 10 cents per article, whether it's on Wall Street Journal or others, I think is really exciting. That hasn't been able to be done before because the architecture is so hard to build and monetize on those small transactions. But I think a company solving for that and really unlocking that next level architecture and being able to lower costs and enabling that to consumers and businesses will really win in this space. Something along those lines, I think, is really what I'm looking for in micropayments specifically. Obviously, embedded lending, I think getting someone qualified for lending and underwriting is become so much easier. So those are solutions that are really taking place, a lot of customer adaptation on the B2B SaaS side. So excited to see innovations there as well. But yeah, definitely, Philip, you pointed out some really good insights there as well.
Wonderful. Let me post another article here from the stack. You know, a lot of really, really insightful data around what's happening geographically. So whether it is regulation coming up in different jurisdiction, you know, the numbers are consistently that for fintech investment globally, US is number one. Then you have UK, India, China, then Germany. And pretty much all reports are saying that for the first time in many, many years, France is no longer in the top five. And I'll put some kind of, Christina, to your point earlier, that in the UK, and the numbers are pretty much the same even globally, 90% of the deals came in at under 20 million for the seed and Series A stage. Whereas, you know, globally, the average deal size in fintech was around 10 million. So again, just basically, you know, indicating a return to early stage investments. So would love to kind of, and again, Christina, I'll stick with you and then go on to Philip, you know. So first of all, you know, do you invest outside the US? And if you do, you can talk about that. And then in the US, maybe if you can share a little bit about, you have different states, you obviously have different state regulators, you know, for fintech, obviously that's huge in terms of, you know, what the federal government is doing, but also what the state regulators are doing, right? So any kind of interesting opportunities for arbitrage that you see there, any interesting startups that you're seeing, you know, who have taken advantage of that? I mean, don't need to name names, but I mean, you know, if you can talk generally about anything that you're seeing there, that would be great.
Yeah, absolutely. I think you're 100% right. First of all, let me start with geography. We do invest internationally. We have done deals in Latin, Asia, Africa, literally everywhere. I will say it is still focused on the US and Canada specifically, but we have done international investments in fintech specifically, especially with Latin. I think there's a lot of people that are still unbanked trying to solve that for them. I think it's also a trust issue, and also fintech going into like supply chains, paying truckers on time. Usually it's like a 90-day process down there. So really getting everything digitalized in Latin, I think is a big trend we're seeing. I think in Asian markets as well as Middle Eastern markets, having more personal finance growing, I think is another key trend that I'm personally seeing. In terms of your other question, in terms of like compliance and regulation coming out, I think compliance in fintech is only going to get larger, especially for larger corporations. I think they're going to want to acquire smaller startups that have solved issues for them, because they've started, I guess, to realize that building their own products internally and keeping up with all the bugs that happen and all those sorts of things is actually really costly to them, versus when they acquire a whole team from a startup that's able to solve that for them. So that's a big thing there. But to the point of regulation growing, the auditing will become more tedious with technology becoming such a core. So that's where I think blockchain could come in and solve that. So solutions specifically in that sense, right? And also others that are really just able to make it less complex, make sure that they're staying compliant, monitoring and flagging fraud. I think there's a lot to do specifically with compliance and fintech, it's going to become over the years a new kind of like wide web to really take over.
Got it. Quick question for you. So glad to hear that you do look at opportunities internationally. We obviously have one company pitching from Toronto, Canada today. For these international opportunities, I'm curious if there's anybody that you like and you do want to move forward with a term sheet. Do you require a Delaware flip before giving out a term sheet, or I'm just curious, how do you go about approaching those international opportunities?
Yeah, absolutely. Usually it's how we can add value. They can really get capital from anywhere, but if they're trying to enter US markets per se, that's where we can really come in and help them understand the differences here. And like the biggest fallout is usually because they don't have a network in the US and therefore things become a lot harder. So facilitating that component is important. They don't necessarily have to fully be based out of here, or their go-to-market strategy has to be in the US, but if that's something they're looking to do, then we are a great fit for them because we have done that numerous times in the past.
Awesome. Philip?
Yeah, we're in a very, very similar position. The majority of our investments are US based, A, because it's the largest market available, but B, the majority of our investors are based here. So they're more familiar with the folks involved, the networks required, et cetera, et cetera. We have made actually a bunch of investments in FinTech, specifically in the LATAM and African markets. We think there's a tremendous kind of low-hanging fruit opportunity to, as Christina was saying, bank people, offer them, loan servicing for small businesses, a many number of applications that kind of almost currently exist in other spaces, but just don't have the existing build out of infrastructure in those emerging marketplaces. So we think it's a super exciting opportunity to kind of invest in and get in at the ground floor, and obviously, tremendously improve the lives of the folks that it's touching. So we have no real bias against folks and companies outside of the US jurisdiction, but we're just more familiar with the networks and requirements to make something successful here. So that's why that kind of ends up being the majority of our flow. I will make a note on regulation. I think it's interesting, right? Like Christina made the wonderful point earlier about how AI is kind of lowering the threshold of entry, the barrier to entry within the fintech space. So I'd actually argue that like that regulation is almost essential to protect, end consumers and investors from potentially, erroneous or, fraudulent work and transactions, et cetera. I do think, though, however, and the Stack article that was posted in the group chat does sort of outline this as well. Like that very same guardrail can then inhibit progress, can slow down build out times, and put companies within those specific jurisdictions at a disadvantage because execution and velocity of execution is essential, specifically in fintech, because of how many smart people want to be in that business. So I think it's fascinating. Regulation will always be behind the current of innovation. So I can understand and appreciate why an entrepreneur would be frustrated by guardrails that feel like they're outdated already, but such is the nature of the beast. I do think it's an important kind of push-pull. And there absolutely would be arbitration opportunities, whether it be interstate commerce. I'm speaking specifically like, some of the gaming investments we made where like folks are trying to do sort of like iGambling, for example, but like they're only in New Jersey, they're only in Arizona, right? Like they're basically going after where the water runs flow easiest first, and then going on to tackle the more complex and challenging places where, regulatory approval takes, years and not months, for example. I think it's a very interesting question because I don't know, like there's just so much at stake, specifically in the fintech space. So much can kind of go wrong that I would never cheerlead or champion more regulation, but I do think it's an important part of the business. And so for any founder who's on the call or any investor on the call, like I strongly encourage you to consider like, can my technology be actually amplified by the wedges that regulation creates? Like, is there an opportunity to sort of maximize your potential, go-to-market strategy because there is not a vulnerability, like, but because there is an opening or an opportunity that other people haven't seized on in a specific, whether it be state or country or whatnot. So yeah, that was a long-winded and rambling answer, but I agree with Christina, and I do think that like the regulation itself is important, albeit sometimes slightly inaccurate and outdated. But it does then therefore create opportunities for really savvy founders to kind of take advantage and really kind of cement and defend their position within their market.
Sounds good. Wonderful.
Actually, one thing to add. Oh, sorry. I was just going to add one thing. In terms of the compliance, I think it's important for fintech solutions to incorporate GRC. I think that'll be necessary selling into larger enterprises going forward because that's just going to be the standard. And a lot of them are starting to do that. I think at least after they build their MVP and have gone through all the early stage components, they have really started to consider incorporating GRC components so that they are able to have better selling points and really expand their product offering, making sure that the company doesn't now have to go to their CISO and ask them, hey, we're going to implement this new product. Can you make sure the compliance side is correct? That's going to take a while for them to get back. So if you say, hey, we have already incorporated this into our product, then it's a lot easier to sell through that route.
Sorry, you cut out
one
a
additional
back there. Incorporate what? I'm sorry, I missed that.
GRC, governance, risk, and compliance. So
GRC.
really,
Got it. Yeah, got it. Phil, you had a question?
No, I just wanted to add that we're assessing fintech opportunities, like compliance and security is like maybe one of two first things we focus on, because a non-compliant and non-secured product is so much more poisonous than say like a CPG brand that like isn't following like, you know, the kind of like advertising, you know, regulations, whatever. Like that is the forefront of our consideration for an opportunity. So I encourage folks to be within that GRC compliance that Christina was just mentioning.
All right, good. We have 5 minutes for Q&A and getting quite a few questions on our, especially the live social media as well as over email. Not too much over the chat window. So what I will do is that, let me just take the top one, that question that's coming in. Okay, so question number one, and I assume it's coming from a startup. What are the most common mistakes fintech startups make when pitching to you while seeking seed or Series A funding? So Christina, maybe stick with you and then on to Philip.
sure. I guess like biggest mistake is just being too naive or like unaware or too confident of like the real true risks involved or the steps that are there to get to a certain spot. They're like very optimistic, which you need to be as a founder. If you're not, it's also terrible. But there is a fine line of understanding what is realistic to achieve within 3 months. Like you cannot acquire 20,000 customers when you just launched a month ago. That's not very realistic for fintech companies to do on the B2B SaaS side. So I think just a founder that's realistic about the hurdles that are there, having an actionable plan, and still being optimistic about it shows real like diligence on their end, real thought, and a real plan where like if I give you money, you have a plan already set out to achieve, you know, the 100 customers that you're going to gain.
Completely agree. I would add this, like, don't boil the ocean. Like if you're coming to me, don't say like, we're going to service all SME loans in this country. It's not absurd. It's ambitious, certainly, but it doesn't tell me anything about why specifically your product is one that we should invest in. I personally always gravitate towards people who have like a very clear ICP defined already, where it's like, hey, like we're solving for this specific pain point for this specific customer group, and we're going to be successful because of, you know, X reasons in the past, but also, you know, this kind of data that shows that folks are attentive with what we're building. You know, it's really easy to get caught up in the excitement and scale of what fintech is. Of what these new technologies can kind of enable and empower. But as an early stage investor, I'm looking at folks that like understand and recognize that and are scaling themselves down to then later scale up and kind of corner a market, rather than kind of be like, hey, all we need is 0.1% penetration on this market, and we'll be at 100 million IR. It's like, great, but that's an enormous market, and you don't know if, you know, a general set of customers would kind of want what you're offering, which would lead to a bunch of challenges in your initial go-to-market. But yeah, I totally agree with Christina, and I would just add, like, don't try and boil the ocean. Be specific, be thoughtful, and be confident.
Yeah, to add to that, Philip, like a lot of founders think, oh, if I go into this vertical, I'm probably never going to leave it. That's not the case. If you go too horizontal at first, I don't think that's a great strategy. If you focus in on a certain niche and you prove it out, then you can expand from there. You're not stuck in it forever. It's just like a proof of point to a lot of investors in your company, and you already have revenue, and then you're able to expand. So it's not a terrible thing if you're very nichely focused on one particular sector.
Yeah, and I will note that our answers here, I think, are a reflection of the changed culture in venture capital, whereas before, at the heights of 2021, there was a focus on growth first rather than an underlying, successful business model. Now investors are, I don't know if savvier is the right word, but they're way more sensitive to, actual product performance and scalability. And so I think that, again, to both of our answers, coming with, a scale down but proven model is much more valuable to us than like a really big, awesome, exciting idea with just the idea powering the kind of force behind it, if that makes any sense.
You're muted. We cannot hear you.
I'm so sorry. Okay, thanks for that, Christina. What role does a startup's technology stack play in your investment decision? And Philip, maybe we'll stick with you and then on to Christina.
Great question. It depends. It really depends. Listen, more complexity doesn't necessarily mean better, but it does likely mean that you do have some kind of technological advantage. You're buying yourself time vis-a-vis your competitors to prove it out, to scale it out. Specifically in fintech, compliance and security, as we were just talking about, is crucial in a long-term and enduring business. And that is obviously, a direct reflection of a company's technology, its architecture, etc. It really depends, right? Like if you're building, cybersecurity, fintech compliance for large institutional banks, like technology will be the first, second, and third consideration we're thinking about. But if you're perhaps thinking more about like a B2B2C, like end consumer embedded payments, maybe that's even too specific, but like just something that's less, high touch point, high volume. I think that's slightly less important. Maybe the user experience is a bit more important for us. Maybe, as Christina was also mentioning earlier, like the distribution of that is more important to us. But specifically within fintech, it is super important regardless. I just think it depends on the specific vertical you're looking to service. But yeah, it's important.
Yeah, absolutely. I think you already answered the question, but I'll just give it a little bit more insight. So yeah, product is important. It really depends the sector of fintech that you're playing in. Personally, I see it as like AI becomes, again, lowering down the barrier to entry. I think it'll be more about distribution channels and partnerships that you're gaining, and really thinking downstream, growing your company and instead of the product itself. Obviously, it's always going to be important regardless of the VC era that we're in. But yeah, I definitely think distribution is the moat these days.
Wonderful. We're past time, and I feel like we have just barely begun to scratch the surface of what's happening in the fintech space and early stage investing. Just really appreciate those such insightful comments, thoughts. Maybe something to kind of round out the discussion. A minute each, if you guys can take, any departing thoughts that you have for our startup founders, as they look to kind of, build these next unicorns in the fintech space, kind of what they should be doing, what they should be looking at. Christina, I loved your pointer on GRC and kind of that, how that should be, especially past the MVP, should be front, left, and center. But, as you see kind of how the markets play out over the next 6 months till the end of the year, would love to get any thoughts. And again, if you can just take a minute each, Christina, I'll start with you and then on to Philip. Any parting advice or thoughts for our founders?
Sure, absolutely. I think currently, if you're able to hold off on fundraising, you should, and use your revenue as your source of runway. I think you should really think about your exits. Do you want to be acquired? If so, then make sure you're focusing obviously on growth, but more importantly about having sustainable business. This is also true for VC, but especially if you want to get acquired by PE as a form of exit, just really understanding long term where you envision the company. Like, do you want to IPO? Because then those are different standards to play by. So I always think you should think long term. growth is super important, but also sustainability as, you know, the market becomes more unstable with potential recessions at hand.
I would say don't be discouraged. Like, forget the noise outside. Like, that's about companies that aren't yours. You're on this call, you're in the right place. You're obviously a founder that wants to be better and learn. That's, you know, a core tenet of that entrepreneurial experience. All it takes is one domino to fall. Christina was talking about partnerships, like whether it be partnerships, whether it be fundraising, all you need is one advocate to be convinced of what you built based on your confidence and your ability to communicate that, and the rest will follow. You know, with that, I would say be obsessed with the folks that you're servicing, and that's a very broad strokes term, but you know, it really is crucial, specifically in an era when there is very little barrier to entry to any specific vertical, to really understand who you should be servicing and how, rather than like how many, because I think that will go a long way in giving you better foundational data to present to investors, to partners, to anyone that wants to listen. Yeah, I just don't listen to the noise, forget about them. It doesn't matter. That is now, like, it's not you. You'll be all right as long as you know, stick to it.
Heads down and focus. Absolutely. You know, just really appreciate again all the time, Philip, Christina. I mean, you know, our founders always learn a lot. Our audience always learns so much, kind of coming to these fireside chats and these panel discussions. Would request both of you to stick around. I will turn it over to our founders. Again, Francesca, Garrison, Fanny, and Nick. Good luck to all of you presenting today. I know you guys will be fantastic. I'll be rooting for you. With that, I will turn it over back to the team.
Thank you, Ike, and our panelists. On behalf of everyone who joined us today, we sincerely appreciate all of the wonderful insights and perspectives shared by you. Before I announce the startups, let's quickly go over the house rules.